What's going on, money lovers? Welcome back. Very excited to bring you a special episode today. Got the pleasure of sitting down with three fellow educators who bring a plethora of investing experience combined. Probably have a minimum of 50 plus years of experience investing. We're talking about here from a teacher who teaches personal finance courses to a former CPA. We've got a lot to unpack today. Lots of great information regarding Roth IRAs, retirement accounts in general, and a few other topics. So if you enjoy this video, please don't forget to drop a like down below and hit that subscribe button for more content. And share this with anyone who you think can benefit from hearing it. Just a quick friendly disclaimer, this is not financial advice. Nothing in this video is to be interpreted as financial advice. This video is for entertainment and educational purposes only. Please consult with a licensed financial advisor before making any investment decisions. That being said, let's get right into the interview. We've got a lot to unpack today.
All right. Welcome, everybody. Excited today to have on fellow educators. We've got a lot of exciting topics we want to talk about, and we have a broad range of backgrounds here. I'll just have everyone give a quick intro, starting with Barry, who's a bit of a local legend around here and got me started with my investing path. Go ahead.
Hi, my name's Barry, and I'm a teacher in a high school in New York. Have been for 21 years, and before that I was a teacher in the Bronx for another 7 years. I've been teaching personal finance for about 25 of those years, and it's one of the best things I've ever done in my career. I love talking money. I love learning about money, and my favorite thing is to impart knowledge to kids that really need it. And I'm very excited to be here today with my friends and a former student of mine. Nothing more fun and more important to me than doing this.
I know, Zach, you got to go soon. Do you want to give a quick intro?
Yeah, so Zach Yonkler, and I'm more of a math guy, but the finance parts always interest me. So I'm hoping to come at this from more of a learner perspective and not an expert, and certainly represent the average person out there that's looking to get themselves right financially and safe and secure and build on what they currently have. So I'm gonna be the average Joe in the bunch, hoping to tease out every bit of information I can for the people out there.
All right, Ms. Jacoby, you want to tell us a little bit about yourself?
Sure. I'm also a high school teacher in New York. Have been for the last 18 years, but before that I was an accountant. I'm a CPA, so that's kind of where my interest comes from, and so love teaching personal finance. I also teach accounting. I even get my students doing people's tax returns, so that's kind of where I am.
Awesome. Glad to have you all here today.
So I'm looking to, like many people, invest in my future and get some type of retirement fund going. Roth IRA, traditional IRA, 401k, 403b, all of them, one of them, multiple. What do we do?
Well, Zach, because you're a teacher, through our district, we have what's called a 403b plan. All right. If you're working for a business, they would have a 401k plan. Basically, they are both retirement accounts, and one is for private and one is for public businesses. If you're an educator, you will have a 403b, which is what I've had, since I've started with my school district 21 years ago. I put in money every paycheck. What happens is they take money out of my paycheck and put it right into a 403b plan. I sit with that advisor once a year, and we decide on what stocks and mutual funds and bonds to invest in. And over the 21 years that I've been teaching in this district, my 403b has grown quite a bit. The key to me is to start early. And a lot of younger kids who come into teaching don't know about it. And I sit with them and we say, we discuss what I think they should do and what they can afford to do each paycheck, and make sure they understand that this is for retirement. It's not for now. It's not for 3 or 4 years from now, or even 10 years from now. It's for 30 years from now. And over a long period of time, that money will grow. And remember, teachers get pensions as well. So you'll have almost a double income by the time you're able to retire if you start early enough.
Yeah, I'm just going to piggyback on what you said. If you are in corporate, I refer to it, rather than in teaching, when you had a 401k, you might have your employer matching what you put in. You wouldn't have a pension probably, as most corporate employers don't now, but they might match what you put into your 401k. Meaning, if you put in $1,000, they might put in $1,000 or some percentage of that. So if you put in 1,000, they might put in 500 to match what you're putting in. Again, to help you save for retirement. Again, it's a long-term thing. Most of the time, when you have money in Roth, in a 401k or 403b, its majority is going to be in mutual funds, which again is just a pooling of everybody's money together, so that you can buy different investments. So like different stocks, Microsoft, Apple, Google, whatever, inside of that retirement account. And then with Roth IRAs, you can get under a certain amount. And off the top of my head, I don't know, it's somewhere in the hundreds if you're an individual, and about 200,000 if you're a couple. But after that, you can't put it in anymore. So Roth IRA is really good for early in your career, maybe even before you're married, but so that you have, again, that time factor that Barry talked about. So my son even has one, and he's 17. So he worked a couple summers, and he's opened up a Roth IRA, and he's put it in, money into it now for 2 years.
So, Zach, do you have any of these accounts? Being that you've been a teacher for a handful of years at this point?
Well, yes, I do have. That goes kind of against me asking the question earlier. Yes, I do have a Roth IRA and a 403b, both going. I can't put into the Roth IRA anymore. We make too much, but that was a couple years ago. But we did max that out until couldn't do it anymore. And yeah, so I mean, I'm not putting a ton into my 403b. I'd like to put in more, but it's just more where I'm at, wanting to have more fluid cash around right now. But I'm still putting a little bit away, and it's just something I don't think about. Really.
Can I just talk to that? At different stages in your life, you're going to be able to have more money and less money. If you want to buy a house, maybe you put a little bit less money away for retirement. If you have kids, maybe you put a little bit less money away for retirement because you need more money now. So that makes sense what you just said. Deb, can I ask you? You were in corporate as well. Can you have both a 401k and a 403b, right?
I did have 401ks. So normally, when you leave a company, that money's still yours. So what I did is I took it and I rolled it over into an IRA, so an individual retirement account. Once you leave the company, usually you can actually just leave it there in that 401k, but there are some tax implications if you stay and you pass away and whatever. So I rolled mine over into rollover IRAs.
Okay. So I have a couple questions I wrote down for you guys. So Mr. Kobe, you probably know best. How old do you have to be to open an IRA?
So there actually is no age limit. So if you're, or age, I guess, floor. If I had my kid in modeling at 6 months old, my kid could put money into a Roth IRA. But my son started his at 14 or 15. He started his at 15.
So that's incredible. Actually, I didn't know that. I would have just assumed it was at least 18 or something. But
no. So a good part of that, though, let me just tack that on. If you do it before 18, it is in like a custodial account. So I am the custodian on his Roth IRA. Once he turns 18, it's all his.
Got it. And so that brings me on my next point, and you guys kind of touched on this already, but most important thing with these retirement accounts is the earlier you start, the better. We'll get into compound interest. I'm sure Barry wants to talk about, but time is either your best friend or your worst enemy. The longer you wait, the less your nest egg is going to turn into. But if you start early, you could really get to some incredible, numbers that you can retire with. And, I'm not talking thousands, I'm talking millions. If you do it right and you start early, this is something anyone can do. Just whether you have any interest in investing, there's ETFs, there's index funds. We'll get into all that later. it can be a pretty passive approach, as simple as you just clicking on your computer, automatic deposit every month, however much money you can afford is better than nothing. And then my other question was, Mr. Yonkler, you had stated that you used to have a Roth IRA and now you make too much money. Is that correct? So that's interesting. So you can still contribute to an IRA, and then perhaps this is a topic for another day, but you can actually do a backdoor IRA. So backdoor conversion from your IRA into a Roth, where I'm going to oversimplify here and I'll turn this over to Mr. Kobe, but it's my understanding that you would basically put the money in the IRA and then you just transfer it over, but you pay, it becomes a taxable event, so you just pay up front.
Yeah, so when you put it in, and then you do pay the taxes in the current year. So like, normally with one of the biggest benefits with a Roth IRA is you put the money in now with after tax dollars, but when you take it out, that money isn't taxed. So whatever it grew, you're talking about millions, and it can grow to millions. You don't pay any taxes on the growth. Whereas, when you convert it, you do pay, because you've put it into, a pre-tax thing like a regular IRA. You would pay the taxes now, and still then the rest of it would grow tax-free.
And what makes this so great for young kids, or not necessarily young kids, but college age kids or kids right out of college, is they're not making that much money. So they are not in a high tax bracket. So they're paying, let's say, 15 or 20% taxes at age 22, and then that money grows until they're 60, and by the time they take it out, every penny is theirs, and that makes it amazing. And that's why I keep on saying to my kids in high school, the Roth IRA is the single best investment in my mind for a young person to start. And back to Zach's point, making too much money is not a bad thing, right? That's not a bad problem to have. So the fact that he can't invest in it anymore, kind of stinks. But making a decent amount of money is definitely a good thing.
He sleeps easy at night. I guess next, we can get into compound interest, which, before we bore you all with the definition and what that is exactly, I'm going to just show you guys what the potential is here of the eighth wonder of the world. So let's just say, what would you guys estimate is like an average annual return for the stock market? What do you guys think?
I'd say 9%.
9%?
Yeah, I'd say that's a fair, since the end of World War II, that's the average, I think.
9%? Okay. So we'll do interest rate of 9%. So let's just say you're starting out today. You're going to open your Roth IRA today after you watch this video. You have $0 and you're going to annually, let's just say what's $100 a month. Let's just say $1,200 a year, right? And let's just say you give that 30 years to grow. How much money do you think you end up with? So $178,000. You put in, let's say, what's $36,000, I think, if I do my math correct, and you turned it into $180,000. Just letting your money sit there, letting compound interest work its magic. Let's push that up to 40 years, and now we're up to $441,000. So this just shows how time is your best friend. And let's just say, I know it's hard at first, but let's say instead of doing $100 a month, you're putting $1,000 in a month, which, let's say down the line, you work your way up, you're getting paid a lot, you have some extra money. You were to put $1,000 a month in, $12,000 a year, at 30 years, growing at 9% annually, you end up with almost $1.8 million.
I'm looking, the compound interest is one time annually, so it would actually be more.
And let's just do 40 years, you would end up with $4.5 million.
Yeah.
Now, the more you increase, your contributions, the higher this return will be, to a ridiculous point. But I figured this is enough for most people. So there's your motivation why you should open an IRA today.
This is the one that usually gets the students going too. Like every year, we usually have, one student who's looking to open up their IRA by, the Roth IRA by the end of the year, because a bunch of them do work. And so that's what always gets them. They're like, wait, what? And
yeah, I mean, and they'll still be young. I mean, like you said, so like if your son's age 17, you said, right?
Yeah.
So 30 years, I mean, you'll be 47 years old and you have $5 million sitting in the bank.
Not so bad.
Does that sound
Not
good?
so
or
bad
what?
at all. Deb and I teach together, and we usually start with compound interest. I think it's that important, and I'm trying to teach my own daughters about it. My own daughters are 18 and 15, and once they start working, I'm going to put money into a Roth IRA, just like Deb did for her son. Not for her son, but with her son. At the beginning of their careers, and hopefully, while they work over the summertime, during college, they'll put $1,000 in, $500 in, whenever they can, and they'll walk out of college with a few thousand in their Roth IRA, and then hopefully when they get a real job out of college, they can start maxing it out. And there will be a lot of money there sitting there, and they didn't really have to worry about it over the course of their working lives.
Yeah, it's great. All right, so now you've all seen the potential. If you want to be a millionaire by 37, it's possible. And all you got to do is open a Roth IRA today. So if you enjoyed this episode, we will definitely be back. This was a lot of fun. Thank you guys for joining. If you enjoyed it, please don't forget to like, subscribe, share it with anyone you think who can benefit from hearing this. And on the next episode, we'll get into how exactly this can be done. So thank you guys for joining us today. And
Thanks, Vinny.
Thank you, Vinny. Thank you, Deb. And thank you, Zach, for participating. This was terrific. And I look forward to doing a lot more with you guys.